Our next guest is keeping his eyes on the prize. Joining me now, Luna Venture Partners CEO Rob Luna. Rob, it's always great to talk to you. And before we get to your picks, I wanted to ask you about, how many ways do you see this market playing out for the year? I mean, now that we're going into the second half of the year, obviously geopolitics is in play, the Fed is in play. Where are you kind of looking as far as the news cycle, and if you're going to make decisions one way or the other?
Yeah, I mean, I feel like I've been saying this for 20 years, Cheryl, but there's a lot to be worried about, but there's a lot to be optimistic about, which means there's a number of different ways this can play out. What I would say, though, underneath this, if you see all that's going on right now with the geopolitical concerns, obviously with tariffs, the market has been holding up incredibly well, which leads me to believe that this market wants to move higher. And so I think if we can get some clarity, if we can get the Fed coming out and actually cutting rates, I think the market could head much higher. There's a lot of opportunity out there. Look, the geopolitical concern is something what's going on in the Middle East right now that we have to keep an eye on. But if we don't see that spread, if that continues to be isolated over there, I think the market can get around this. And I believe in the second half you could see things go much higher. Unless, like I said, something gets out of control, it's something that we're seeing right now, some type of black swan event, I think the market wants to head higher.
Well, look, we're getting a little more sense now that we could see a rate cut sooner rather than later. And one of my favorite guests in the morning, Liz Peek, she's got a new op-ed in The Hill. I want to read this to you. Powell's decision not to cut rates is baffling for many reasons, not just because of the amount of debt that we're sitting on and the fact we're going to have to refinance $11 trillion in the next year. That's according to the U.S. Treasury, but also by the fact, at the end of the day, Jay Powell is not an economist, and she makes that point. Your reaction?
Yeah, I completely agree with that. I think, Trump is right. They are a little bit late to the game. And if you look at the amount of consumer debt that's been piling up, I know the show before you, they were talking about Gen Z. Gen Z is strapped right now. They can't afford homes. They're piling on consumer debt. And those credit card rates, Charlotte, look at, they're 28, 29%. So when you talk about cutting rates to bail out big businesses, I disagree with that. I think it's to help the average consumer right now who's struggling with debt. And I think, look, at the end of the day, we all know this is a political move, I think, in terms of Powell. He doesn't want to be bullied around. He's trying to make this statement that the Fed has independence, but I don't think that's the right thing for the economy by any means.
Yeah, well, certainly that is not been good for the markets and really not good, of course, for that debt that we've got to refinance. I want to ask you something about cybersecurity, because we're hearing more voices from the intelligence community warning about the possibility that we could have cyber attacks. These could be coming from the Iranians, this could be coming from the Russians, the Chinese, and why this is different, of course, now is because of what we're seeing between the Israelis and Iran. So one of your picks is CrowdStrike. And I find this interesting, Rob, because I'm curious if you think that they've overcome kind of the black cloud that was over them because of the global service outage.
Yeah, I mean, I think they have. If you look at the stock, it's rebounded significantly, and they are a major player. I think they did a pretty good job at handling that from both a PR perspective and a service perspective. We were one of those people that we were offline for a little bit of time. But look, I think the valuations now, while they are a little bit high, I think if you look out 2 to 3 years of where this company is going, the market that they have is like huge of what they still haven't tapped into yet. And when you think about CrowdStrike, or you think about cybersecurity in general, we know everything continues to go to the cloud. This is not an area, whether the economy does good or bad, that you're going to see companies pulling back on. They're going to continue to invest in it. And not only do we have to worry about these external strikes, we also have to worry about internally. As more data starts to go there, more of these businesses are going to need to invest heavily into cybersecurity. And I think CrowdStrike's going to be one of the major winners there.
Yeah, well, I know that you've got Oklo as an AI pick, but also nano-nuclear energy. So that kind of goes into the grid story, if you will, as far as the power that we need for these data centers.
Yeah, I mean, if you look at the power usage in the U.S. last year, about 3% of that was in data centers. If you fast forward 4 years from now, total power consumption, data centers are expected to take over 10% of that. So the traditional power grid's not going to be able to take that. Now, nano-nuclear, even Oklo, all these companies, I heard someone saying that might be a little bit overcrowded. Well, they're not really even to the market yet. So nuclear is not overcrowded because we're not using it yet. And so that leads to 2 problems. Number one, it could be speculative if they don't get there. But the secondary thing is, if they do get there and you're not invested, this is where you're going to get the 20 baggers, 30 baggers. So if you're a younger person in particular, you got to take some risk in these names.
Yeah, no, the French have been using nuclear power effectively and safely, more importantly, for decades. And I've always been of the opinion the United States is behind the ball on that one. Rob Luna, it's always great to have you. Thank you for being here.
You too. Thanks, Cheryl.